The Quant team has just shared an article on Twitter which makes it appear highly likely they will be working with Hong Kong on tokenization of assets in partnership with HSBC. At the same time, we've seen Ripple roll out their CBDC platform for governments and financial institutions and confirm that the Hong Kong Monetary Authority will be using this new CBDC product in a test pilot. And last but not least, we have the Chronos chain once again at risk of falling out of the top 10 blockchains in total value locked. We're going to break down all that for you guys and more in today's daily market update. What is up, everyone, and welcome back to the Everything Crypto Show. Now, before we hop into the news, I do want to just take a look at the overall markets here, as there are a couple of interesting things happening. And I do actually believe that the market is set to make one move to the downside after a pretty nice couple of months here for crypto since the start of the year. So we can see at the moment that Bitcoin is trading at just under 27,000, Ether just over 1,800. We have XRP up at 46 cents here, up about 10% on the week, and rightfully so. This has been a very big week for XRP. But majority of the market has really just been trading flat for the most part, and we can actually see here, taking a look on the week, that some of these projects here, like Hex, is up 14.4%. This has to do with the drop of the brand new Pulse chain, which I personally would not touch with a 10-foot pole. We got Pepe up 4.6%, Stacks up 2.4%. This is a Bitcoin layer 2 scaling solution. But for the most part, I mean, not a lot of big movers. It has been a pretty moot week to both the upside and the downside. Now, taking a look here at the overall total crypto market cap, we can see that it's coming in at the moment at just about 1.093 trillion. And to me, it does appear that it wants to come back down for a retest of the 1 trillion level. And we can actually see here that the total crypto market cap is right back at its bull market support band. However, if we take a look at Bitcoin, it's still actually above its bull market support band. And more interestingly to me when it comes to Bitcoin is the fact that the bull market support band here is in fact between about 24,900 and 25,300, with a very solid area of support at 25.1k sitting right in the middle. And we can see here, if we actually take a look at the weekly candles, that back in August of 2022, this acted as a strong area of resistance. And once again here in February, we actually got double top rejected at 25k before we came back down to 20k, back tested the bull market support band, and then made that run up to 30,000. So in my opinion, it does appear likely that Bitcoin does want to go ahead for a retest of 25k. And from current prices, that would mean that we see a decline of about, give or take, just under 7% here to get down from 27k back down to 25. Keep in mind that, I mean, on a year-to-date performance here, Bitcoin is up, I want to say it's like over 60%. How much is Bitcoin up right now? It's up 63% year-to-date, and we're not even in the halving year yet. So this does suggest to me that, you know, it is an accumulation year, and we could definitely see, just as we saw a big move to the upside, we could also see a very big move to the downside and one final flush out. So that's the area I'm looking for here on Bitcoin. Now, if we actually take a look at Ethereum, the chart does also suggest to me that Ether wants to make its way to the downside, and that's why I do think more than likely that is going to be the way the market moves for the next little while. So we can see here that Ether got double top rejected at about 2100, was not able to actually close a weekly candle above 2000, which is a massive area of resistance for Ether. We actually got rejected here on the run up leading into the merge hype last year, in line with getting rejected at the bull market support band. We got rejected at the band once again here in September, once again here in November, and you guys can see why I'm actually a very big fan of the bull market support band. It also back tested here as support for Ether in March before Ether went on a nice run from 1400 up to 2100, and it's just a very accurate technical indicator. Basically, when we're above the bull market support band, we're bullish, and when we're below it, we can call it the bear market resistance band. And it does look to me like Ether does want to make its way back down for a test of this, which is at about 1700. Also an area of clean price action on the chart. Now, the thing is, if Bitcoin wants to make its way back down to 25k, which I do think is likely, I do believe that Ether is set to drop harder than Bitcoin. That is just the way the market tends to move for the most part. When Bitcoin drops, altcoins drop harder. And I actually wouldn't be surprised if Ether did make its way below the bull market support band and potentially even go in for a retest of that 2018 all-time high at 1400. there is a lot of indicators here to suggest that we are by all means in Bitcoin season and not altcoin season, and therefore it is possible to see some strength in Bitcoin actually have it hold above the bull market support band while the rest of the altcoin market actually trades below it. And the big chart that I do keep looking at here is the Bitcoin dominance, which has really just been on a big move to the upside over the past couple of months. And we can see that it looks like it's on the verge of a massive breakout here at that 48% level. I wouldn't be surprised if it wants to make its way back all the way up here to like 58, 59%. And that's a good thing, whether you are invested in Bitcoin or not, because it effectively means that a lot of the liquidity has been flushed out of altcoins as people flock to safety, which in terms of the crypto market would definitely be Bitcoin. And then we see the halving happen, we see more money flow into Bitcoin, and then that money flows into altcoins. That is just the natural market cycle. So that's what I'm looking for here when it does come to the charts. And aside from the charts and the immediate price action, I do want to point out that the fundamentals for both Bitcoin and Ethereum are incredibly strong at the moment. This is actually a look at the total hash rate here, so it shows you how many miners are fighting to validate the Bitcoin blockchain, maintain its security, as well as fight for those Bitcoin block rewards. And we are here at all-time high territory. And you can see here that ever since the bull market ended back in November of 2021, that the Bitcoin total hash rate has just been on a relentless bull run to the upside. We've seen some declines along the way, but it pretty much has been up only here for the Bitcoin hash rate. And this is a very big sign of maturation, in my opinion. It shows you that even as the price of Bitcoin falls, that miners are getting more and more bullish on Bitcoin, and that more and more people are looking to mine it than ever. And that does fare very well for the industry long term, as Bitcoin is still the king of crypto, and I do think it will stay that way for the foreseeable future, at least for the next couple of cycles, in my opinion. So we got Bitcoin hash rate in all-time high territory at the same time that Ether supply is actually in all-time low territory since the merge has gone live. We can see that in the past 247 days that there has been about 686,000 Ethereum burned compared to 437,000 minted. And this means that just about 249,000 Ether has been burned since the merge went live. So sitting at a current supply of 120.2 million, had Ether stayed under proof of work, this supply would have actually been at 123.1 million. So the transition to proof of stake has had a massive impact here on the tokenomics of Ethereum. And the reason this is happening is because the gas fees on Ether have been incredibly high recently. And the more gas we see on Ethereum, the more ETH is actually getting burned every transaction via EIP 1559. Now, the one thing to note here is that as a layer 2 adoption does occur and as gas fees do come down, that yeah, Ethereum's deflation might cool off a bit because gas fees will be lower. However, in the meantime, layer 2s have not seen the same adoption that the underlying layer 1 Ethereum chain has. And until then, Ether will continue on a deflationary run. And it's kind of a trade-off here. You know, if we don't use layer 2s, Ether is expensive, but it's more deflationary. And if we do use layer 2s, Ether is not as deflationary, but less expensive to use and more efficient. And personally, I do prefer the latter. I do think that layer 2s are going to be a massive theme for the next bull run. And that's why I have been keeping my eye on projects like Arbitrum, like Optimism, as well as Polygon's new ZK EVM. This is their layer 2 solution here, which has actually seen a lot of inflows over this past week. So definitely keeping an eye on Ethereum layer 2 scaling solutions, but in the meantime enjoying this deflationary pressure, making all of our Ether worth more than it was pretty much every single day here in terms of supply. Now, hopping into the altcoin news here, we're going to start off with Ripple. So Ripple rolled out a CBDC platform for governments and financial institutions. And this is definitely targeting big institutions in terms of creating their own digital currencies, described as a frictionless end-to-end solution. It is in fact built on Ripple's private ledger, so based on the same blockchain technology as the XRP ledger, which was also designed primarily for payments. So the big thing here that we do want to know is will this private ledger be tapping into XRP blockchain and using XRP as its native token, just like the XRP XRP ledger does? And I do think that the answer here is yes. I think that makes the most sense because it actually brings value to XRP, and that's why Ripple has been working on the XRP blockchain to make it so efficient. So while it has not been confirmed, it is highly likely that this private ledger is using the XRP blockchain, which does mean good things for XRP itself. So as a trusted partner to several central banks, we believe this platform will help solve problems for many banks and governments who are devising plans and developing a technology strategy for CBDC implementations. And this comes from Ripple's Vice President, James Wallace. He adds that the platform's innovative capabilities will help enable instant settlement of both domestic and cross-border payments, reduce risk, and improve the user experience of quickly sending and receiving digital currency on either side of the transaction. So according to Ripple, this new platform enables governments and institutions to oversee and customize every aspect of the CBDC's lifecycle, including creation, distribution, redemption, and removal from circulation. And they will also be able to use this platform to manage the distribution processes involving the CBDC, whereas end users, both corporate and retail, will be able to securely store their digital currencies and use them for purchasing goods and services, similar to how existing payments and banking applications function. So very, very cool stuff here coming out of Ripple, looking to provide basically an all-in-one house solution for CBDCs. And coinciding with that announcement, it was also confirmed here that Ripple is to demonstrate tokenization in a new Hong Kong Monetary Authority pilot program, who is going to be tapping into this new CBDC program by showcasing a real estate asset tokenization solution. So we can see here from Monica Long, the president of Ripple. She says, honored that Ripple was one of few selected to participate in the HKMA's pilot program, building a real estate asset tokenization use case with Fubon Bank, leveraging our CBDC platform. Tokenization of real-world assets such as homes, bonds, equity, investment funds, etc. is primed to be in tens of trillions of dollars by 2030, and I'm especially excited about the potential to bring all kinds of illiquid assets on-chain in the near future. So not only testing central bank digital currencies, but how they can interact with other tokenized assets, in this case, a real estate asset tokenization solution. And keeping on the topic here of Hong Kong and tokenization, we actually saw Quant tweet back in February. This was a quote directly from an article that we are going to take a look at because it does show some very interesting connections between Quant and Hong Kong financial institutions. So they shared this article and said DLT also enables additional business model innovation. In the Hong Kong green bond trials, the green claims were separated from the financial instrument and separately tokenized, enabling their independent trading. Now, what I found more interesting about this is that Goldman Sachs as well as HSBC were working with Hong Kong on the actual issuance of these tokenized green bonds. And as I have discussed previously on Twitter here as well as on the channel, it would appear that there is an indirect connection between HSBC and Quant through Quant's partnership with Oracle. So it was announced here that HSBC, the largest European bank, will be tapping into Oracle Cloud technology to accelerate their digital transformation. Catherine Zhao, the head of HSBC Digital Innovation, has discussed how bullish the bank is on blockchain, tokenization, and CBDCs. They will be tapping into Oracle's cloud infrastructure to help them with this digital transformation. Now, Oracle must tap into DLT to make digital wallets and tokenization a reality for their banking partners, and it would appear that Quant Overledger is the answer, as they are in fact partnered up. So we can see here that there are some different solutions on the Quant Overledger, including Overledger itself, the world's first blockchain agnostic API gateway, Overledger Integrate, enabling you to create blockchain applications that run on any blockchain faster and cheaper, as well as Overledger Tokenize, the ability to create secure digital tokens without writing a single line of code. And as we can see here on Oracle's blog, they are partnered up with Quant in a highly collaborative manner to roll out solutions on the Oracle blockchain platform, with the key focus on finance. So it says right here that Oracle fintech partner Quant has been working with Oracle and the Oracle blockchain platform team to address these challenges with a production-ready solution. The partnership has resulted in Oracle certifying Overledger for interoperability with Oracle's blockchain platform. For customers looking for production-ready infrastructure to support cross-ledger interoperability between Oracle blockchain and other ledger technologies. Quant provides an immediately available solution certified in Oracle Cloud Infrastructure. And Quant is now working in a highly collaborative manner with Oracle to roll out solutions on the Oracle blockchain platform for a variety of sectors. So to top things off, the Quant CEO Gilbert Verdian actually worked at HSBC in security projects and programs according to his LinkedIn profile, and we now have both an indirect link between Quant and HSBC through Oracle, and a direct link between the Quant CEO and HSBC. And then if we factor in on top of all this that Quant went ahead and shared that article that showed Hong Kong and HSBC were working together on tokenized green bonds, it does lead me to believe that, Quant wouldn't be sharing that unless they had some sort of stake in what was happening there. So this is just one of many puzzle pieces that leads me to believe Quant DLT will play a major role in the future of financial technology, and there is a direct link between the use of the Quant overledger and the demand for the Quant token. The Quant token is needed for enterprise licenses, developer licenses, platform fees, identity and account, application users, as well as all transaction processing via the Quant overledger. And now I do want to quickly talk about the Quant token. And the reason for that is I do think it's coming back up on a very interesting area of support at $100. Now we can take a look here at the chart and see that $100 historically has been a very strong area for Quant in terms of the price action. In fact, we saw that we tested about $97 here in June of 2021, failed to break above it, and then when Quant finally broke out here in late July, early August of 2021, it went on that rally from $100 up to $428 by September of that same year. So moving up about 320% in pretty much just about a month and a half time period. Now we can see, as indicated by the arrows here, that $100 historically has acted as a very strong area of support for Quant with some really nice rallies off of that level. I mean, most notably, we saw back here in September of last year that Quant rallied from 100 up to 228. And again, here in the new year, we saw that Quant hit $100 back in late December, January 1st of this year, and then went all the way up to 160. So another nice 60% rally. And slowly, it just has been sliding all the way back down to $100. And this is the first area I'm keeping my eye on here at $100, and below that I am also looking at $85. We can see that if Quant has broken below $100, 85 historically has acted as a strong area of support. The one exception here kind of being the bear market lows that we saw, the big capitulation in May and June of last year. We saw a lot of altcoins make new lows there, and I don't believe that unless we see more of a serious pullback, I don't think that Quant is going to come back down to this range. That's why we were talking about it so much when Quant was trading in this range at that time period in 2022. That's why we started covering it on the channel more frequently. I do think the much more likely scenario is that Bitcoin and Ether are going to pull back, as we said at the beginning of the video. And in this case, I don't think that Quant is going to hold $100. It has made for a very good trading range over the past year. However, this time around, I do believe that Quant will in fact make its way back down to 85. And that's where I would be looking to scoop up a bigger bag of this altcoin. So that's all I wanted to talk about in this video in terms of Quant. And the last thing I do want to discuss today is in fact CRO, and more specifically the Cronos chain and the crypto.org chain. So we can see here that the Cronos chain is coming in with a TVL of about $362 million. And taking a look here at the actual TVL history of this platform, of this blockchain, it's been pretty stagnant since the new year. I mean, on January 1st, it had a TVL of about 386 million. It's bled down to about 20 mil, down to 362. And interestingly enough, we can also see that the TVL here does follow in declines with the price action of CRO. This is because a lot of the TVL, all of the TVL actually is denominated in CRO. So the price action of the project does have an impact on TVL, right? In terms of USD anyways. But even if we actually take a look at the amount of CRO on the Cronos chain, that has also somewhat flatlined, if not actually slightly declined here. I mean, declined quite a bit from about 6.9 billion and now down to 5.69 billion. So over a 1 billion decline in the amount of actual CRO on the Chronos chain as well. And if we actually take a look here at 9th place, which is the Mixin blockchain, it now has a pretty significant lead over Chronos with over 419 mil in TVL compared to Chronos' 362 mil. And then below Chronos, we have the Kava chain in 11th, we have the Phantom chain in 12th, which are coming in at 341 mil and 336 mil respectively. And this means, I mean, even taking a look at Pulse here with 324 mil in TVL, the point I'm trying to make here is that Chronos chain is not very far off of potentially falling down to 12th, maybe even 13th place at this point. And to be honest, I do think that if Chronos does remain stagnant while these other blockchains are growing in TVL, then eventually this is going to be the case and that Chronos will unfortunately fall out of the top 10. Now, it's worth noting here that the Chronos chain is not the only blockchain that does matter when it comes to CROcoin itself. We do also have the Crypto.org chain. And taking a quick look right here, we can see that there is about 6.29 billion CRO locked up here on the Crypto.org chain that is being staked, currently earning an APY of about 9.6%. So there is also a ton of TVL here on the Crypto.org chain at the moment. And it's not only the Chronos chain that is important when it comes to this altcoin. However, given that the Chronos chain is the newest blockchain and that this is where a lot of the decentralized applications are being built that utilize CROcoin, definitely we do keep our eye on the Chronos chain, and at the moment it appears that it's really been stagnant while some other blockchains are playing catch up. So I will be keeping a close eye on Chronos, but yes, I am still bullish on other aspects of the CROcoin ecosystem, including the Crypto.org chain as well as the Crypto.com Visa program. So on that note, I hope you did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Saturday, and I hope to catch you in the next one. Peace out for now.